In a bold move, former President Donald Trump has proposed a comprehensive plan to eliminate the Internal Revenue Service (IRS) and overhaul the federal tax system. This initiative aims to simplify the tax process, reduce the complexity of the government's bureaucracy, and shift the revenue model away from traditional income taxes to tariffs and other external sources. While this plan promises to bring about significant changes, it also raises questions about its potential impacts on the U.S. economy. In this video, we'll explore the key components of Trump's proposal, the potential economic impacts, and the challenges that may arise from such a significant policy shift. Key components of Trump's plan. At the heart of Trump's proposal is the dissolution of the IRS. This agency is responsible for collecting federal income taxes, enforcing tax laws, and overseeing various tax-related operations within the U.S. Trump's plan aims to eliminate what he describes as bureaucratic overstepping by the IRS. According to him, this move would simplify the tax system and reduce the size of the federal government. He suggests that instead of the IRS, a new approach is needed to manage the nation's finances more efficiently. This would be a dramatic shift away from the current system, which has been in place for over a century. In place of the IRS, Trump proposes the creation of the External Revenue Service (ERS). The ERS would focus on collecting revenue from external sources rather than from the American citizens. Specifically, the agency would focus on tariffs, duties, and other income generated from international trade. The goal behind this shift is to reduce the tax burden on American citizens and shift it to foreign entities. Instead of relying on taxes levied on income from U.S. workers, the government would collect revenue through trade and foreign imports. To compensate for the loss of income tax revenue, Trump's plan includes the implementation of new tariffs on imported goods. The idea behind this strategy is twofold: to protect American industries from foreign competition and to generate significant revenue from goods brought into the country. Trump believes that tariffs will help boost domestic manufacturing by making imported goods more expensive, thus giving American-made products a competitive advantage. However, experts warn that imposing tariffs can lead to trade disputes and could result in higher consumer prices, as companies may pass on the added costs of tariffs to consumers. Trump's proposal also includes the elimination of federal taxes on certain types of income, including tips, overtime pay, and Social Security benefits. This is seen as a measure to increase disposable income for workers and retirees. By removing these taxes, the government hopes to put more money into the pockets of everyday Americans. For workers, this could mean more take-home pay, while retirees could see a boost in their monthly Social Security benefits. Potential economic impacts. While Trump's proposal is designed to simplify the tax system and reduce bureaucratic inefficiencies, it could have significant and far-reaching consequences for the U.S. economy. Currently, the U.S. government relies heavily on income taxes for its revenue. If the government were to switch to tariffs as its primary revenue source, there would be a massive shift in the federal budget. While tariffs could generate some revenue, analysts warn that it may not be enough to cover the country's current spending levels. A reduction in income tax revenues could lead to an increase in the budget deficit. If tariff revenues fall short of expectations, the government might be forced to borrow more, further escalating national debt. The long-term fiscal stability of the U.S. could be threatened if tariffs do not produce the desired level of revenue. One of the biggest concerns regarding the implementation of tariffs is the potential impact on consumer prices. Tariffs make imported goods more expensive, and businesses that rely on foreign goods for production may increase their prices to cover the additional costs. This could lead to inflation, reducing the purchasing power of American consumers. Everyday products, from electronics to clothing, could become more expensive, making it harder for average families to make ends meet. Inflation could also erode wage growth, as workers may not see their pay increases match the rise in prices. Another major concern with imposing new tariffs is the potential for retaliation from U.S. trading partners. Countries affected by the new tariffs may decide to impose their own tariffs on American goods, leading to a cycle of escalating trade barriers. This could result in trade wars that could harm U.S. exporters and disrupt global supply chains. For example, U.S. agricultural products such as soybeans and pork could face higher tariffs in key international markets, hurting American farmers. Additionally, such tensions could destabilize international markets and undermine the global economy. Trump's proposal to shift revenue generation from income taxes to tariffs is designed to boost domestic manufacturing by making imported goods more expensive. The idea is that higher tariffs would encourage consumers to purchase American-made products, thus fostering job creation in domestic industries. However, the impact on the overall economy and employment is uncertain. While some sectors, such as steel manufacturing or automotive industries, might see growth, others may struggle with higher production costs. Industries that rely heavily on imported raw materials or products might face higher costs, reducing their ability to compete both domestically and internationally. Additionally, businesses might be forced to lay off workers if they cannot absorb the added costs of tariffs, potentially leading to job losses in certain sectors. The plan also raises concerns about wealth inequality. Eliminating taxes on certain types of income, such as Social Security benefits, could benefit retirees who rely on those payments as their primary source of income. However, wealthier individuals may benefit more from other proposed tax cuts, such as reductions in corporate tax rates. This could exacerbate the gap between the rich and the poor, as wealthier individuals and corporations stand to gain more from these changes. The plan might make it harder for lower-income Americans to benefit from tax relief, as they may not have access to the same types of income or tax exemptions. Furthermore, the reliance on tariffs could impact businesses that operate in international markets. U.S. companies that export goods may face higher tariffs from foreign governments, reducing their competitiveness abroad. This could lead to a decline in exports, further affecting the balance of trade. Small businesses that rely on imported materials to produce their products could also face financial challenges, limiting their ability to grow and compete in the market. Ultimately, while the proposal aims to simplify the tax system, its potential economic effects remain uncertain. It could lead to higher consumer prices, job losses in certain industries, increased national debt, and greater income inequality. In conclusion, President Trump's proposal to eliminate the IRS and overhaul the U.S. tax system represents a radical shift in how the government collects revenue and manages its finances. While the plan promises to simplify taxation and reduce bureaucratic inefficiencies, it raises several concerns about its potential impacts on the U.S. economy. The shift from income taxes to tariffs could result in higher consumer prices, trade disputes, and a possible increase in the federal budget deficit. Additionally, the proposal may disproportionately benefit wealthier individuals, exacerbating wealth inequality in the country. As the plan moves forward, it will be important for policymakers to carefully consider these potential drawbacks. The challenges of implementing such a large-scale reform are substantial, and it remains to be seen whether the benefits will outweigh the risks. For now, the future of Trump's tax overhaul remains uncertain, with much of its success depending on how the proposal is executed and how the economy responds to the changes. If you enjoyed this video, please subscribe to our channel. Your support is greatly appreciated. Thank you.